Okay, let's talk about the overview of the slice and dice strategy. So, there's a couple things that I think are really important that you understand if you're going to be using this strategy. Number one, and this is going to be a general recommendation for any strategy that we discuss, is that you review any relevant topics in the Trade Academy. So, for this particular strategy, trend identification is going to be the main element in the Trade Academy that you want to make sure that you review fully so you understand the trend lines and the cutting. That's going to be by far the most important one. Now, after that, I would say, it's also going to be very helpful if you understand price action. It's going to be very helpful if you understand, I would also say market structure, because market structure will help you understand kind of where those divots are to connect your trend lines. And then I would also say risk management would be extremely helpful. With that being said, reviewing all of that information in full in the Trade Academy will absolutely help you be successful trading this strategy in the live markets. Now, that leads me into tip number 2, which is practice. So the more you practice with this, the better you're going to get. The thing about strategies like this is that they're going to look a lot simpler when I go through the market and I just kind of show you how it works, versus when you actually get into the market on your own, trading this for the first time or even learning it. It's going to be a lot more difficult. It always is. It is for everybody. And there's a couple things too that come into play when you start trading this, especially if you're not on a demo account, if you're on a live account. When you talk about trading psychology. Trading psychology is a really big one, and especially for this strategy, because in this strategy we are constantly flipping our biases. We are constantly in a trade one way or the other. There's not really a break. There's not a lot of time to sit back and just relax. You are always in a trade, whether it's a buy or a sell. When you get out of one, you're in another one. You have to flip your bias on the market like that. And that can be taxing on your trading psychology. So the more practice you have, the more comfortable you are with the strategy, the more experience you have testing it and trading it in live markets, the better you will be able to overcome those trading psychology barriers. So the second biggest tip is just going to be practice. And really, I don't like to use the word practice. I think Allen Iverson said it best. We're talking about practice, man. But really, I want to use the term experience. The more experience you have playing around with the strategy and really testing it and trading it with live money on the line, the better you're going to be. So start small. Start on demo. Start with really small lots. And really just get that experience under your belt. It's going to help tremendously, especially with a strategy like this, where yes, it is deceivingly simple, but trading psychology, you will get hammered on the bias flips. A third tip that I have, I think, for this strategy that's really important is kind of understanding the entries a little bit better. So, when you are entering on cut breaks, trend line breaks and stuff, there's always going to be a factor of risk to reward. So let me show you a couple examples of that real quick. I think it's important to understand. So when we look at a few of these examples, okay, here's a really good one right here. Here's a really good one. So when I see a trade like this, okay, the first thing that's going on in my mind is when I enter this trade, my stop, essentially my exit is way up here above this, potentially, okay? Because price could come all the way back up, and I would have to remain in this trade based on the rules all the way until this breaks. All right, that's a relatively big stop loss, right? So I'm on the 1 hour on USD CAD. That's a 80 pip stop loss. You can see on a lot of these, based on a lot of these trades, like that's a lot of pips. That could wipe out a few of your other trades if this were to go wrong. So you kind of want to be a little bit subjective. If you're in a situation like this where you're not getting into a trend until it's kind of late, or you're very far away from the recent swing high or low, you may want to subjectively choose to not enter that trade, or to wait, or to maybe even use another exit criteria. Now, we got lucky, for example, on this case, you didn't have to worry about that because you actually already had your cut. So in this case, by the time you went to enter the trade, you didn't even need to worry about this. If this cut coming down broke, you were out of the trade. So that was a nice help in that particular situation, but that won't always be there. Let's see if there's another good example. Okay, here's another good example over here. I am not going to enter this trade in the live market. When I'm trading the strategy, if I'm in this situation, I would not. Obviously, this trade worked out, right? So again, normally it still will, but I am not going to enter this trade. Why am I not going to enter this trade? Because my stop would have to be all the way up here, and that just doesn't make sense. Like it's not going to make sense because, and look how much I end up walking away with. I do walk away with pips. Yeah, you don't know how much you're going to walk away with. Sometimes it could be a lot more, sometimes it could be a lot less, but just in general, the chances of the risk to reward on this trade making sense are going to be really small by the time you're all the way down here already. I mean, you essentially missed the move, right? You needed to be in up here. That was when you needed to get in. So if you missed that, in hopping in way down there, you take on a lot more risk. Just something to keep in mind. Another thing to keep in mind, and this kind of goes into my next tip, which is that using other tools can significantly help you, such as understanding price action, understanding chart patterns, understanding a few things. So for example, in this case over here, we were in this buy trade right here, and technically based on the rules that we've established, we ended up holding the trade all throughout this for a loss over here and not catching this downward move. We didn't get into it over here. So there's some things that could have really helped out with that. This right here is a pennant formation. Like there's a lot of different things that really could have helped out. Even down to the supply and demand, the supply zone that developed, the triple top that developed, the price action that developed indicating that there was a problem. Okay, the market structure flip that took place. Okay, all of these were indications to get out of the trade. Another big help for this strategy is understanding multiple time frame analysis. And again, this strategy is designed to be simple, but it can always be made better, more profitable with other tools. So if you understand multiple time frame analysis, watch this. So I'm on the 1 hour time frame. I can come down to the 15-minute time frame, a time frame below. All right. Now look how more precise all of my trades become. Okay, my entry is not up here anymore. It's down there. My exit is not down here anymore. It's up there. Everything is better. Let me come back here over to the areas that we were in. So much better. Look how much more money is on the table. I'd have been out not way up here, but way down here. Okay, this is the idea on this entry up here. I wouldn't have been in up here. I'd have been in down here. Okay, there's so many more things that open up to you when you understand the other concepts that are taught in the Trade Academy. And again, depending on your expertise, depending on how long you've been trading, depending on how much of the Trade Academy you've gone through, how many concepts you've mastered, this is a template that you can always build on and make as complicated or as catered for your style as you want to make it. Which leads me into the next tip. Choose a time frame that works for you. Like I said, you can do this wherever you want to do this. You can deploy this strategy wherever you want. You can pull up USD CAD here. I'll show you. I can go to let's go to the daily. I'll go to the daily time frame on USD CAD. Let me just come back here, and we can do the exact same thing that we just did. It's the same. It works the same. You can do it across any time frame that you want. See, we're just cutting the market up, and this is on the daily, right? So you can go to any time frame you want to go to and do the same thing. So what matters is that you're choosing a time frame and an asset, for that matter, that fits your personal trading style, your personal trading preferences. It's really important to understand, because a lot of people who come in through our doors, I know they have confusion about what time frames they should be trading. The correct answer is whatever time frame matches your risk management and matches your lifestyle. So this just happens to be a strategy that can fit any of them. So make sure that you don't feel obligated to stick to whatever time frame is used just as an example in this training or anything like that. You can really expand to whatever works for you. So the last major point that I think is important to hit on for this strategy is making sure that you have the proper expectations for results. One thing I've noticed, a lot of people getting involved in the industry tend to not really understand how trading works, and a lot of that is secondary to all of the horrible marketing that is out there. People who are selling trading to the masses, to retail traders, who give retail traders the wrong impression of how things are supposed to work. Nothing is ever 100%. Everything you do in trading is a probability game, right? So every strategy that you learn is going to have, certain probability win rates at any given time. It's all based on statistics, right? And it's really important to know and understand that not every trade you enter is going to be a winner. Not every trade you enter is going to be a home run. There's going to be a lot of trades that come out break even. You might even have small losses. Overall, this strategy will be highly profitable. However, if you don't have the proper expectations, you might take a few losses in a row, and then trading psychology will kick in, and you'll end up in a bad place, and you'll start making bad decisions, and you'll see more losses that you should not be seeing because you're not in the right mind frame. So having proper expectations is very important. So let's just take an example of all of the data that we went through. So we went through data for 42 days, so that's about 6 weeks. So we went through about 6 weeks worth of data. And in that 6 weeks of data, what were the results? Let me grab my calculator. Alright, so I just went through and calculated everything up, and we went 16-3, which is an 84% win percentage, and we caught over 1,000 pips in 6 weeks, just off this one pair on this one time frame. Now, obviously, every different section you take of every different market will give you different results. Your winning percentage could be higher, could be lower. Your total pips could be higher, could be lower, right? Everything's going to vary. This is just an example. But I encourage you to go through and do some research and do some back testing on your own and see what the results are. But overall, the strategy performs very well across all of the different markets. So the strategy performs well overall, but it's very important to understand that there will be areas in certain markets where it does not perform as well. And one of the tricks is going to be consistency, making sure that you take those trades consistently in all market conditions, and that you are trading with proper risk management so that if you hit an area that's not great, you don't break. You're able to continue to trade consistently. And then when you get to an area where things are going well, it's all profit.